Hello and welcome back, TrendSpider users, to this video number 5 in our GoNoGo educational series. My name is Tyler Wood. I'm a CMT charter holder, and today, as always, I'm joined by Alex Cole. How you doing, my friend?
Great.
Awesome. Now, volatility is kind of a dirty word on Wall Street, or at least amongst the investing public. It's used to strike fear into the hearts of investors, such that they call their brokers and they can make some more commissions. What we're here to talk about today is how to use volatility to our advantage, and in particular, volatility compression. So before we dive into the GoNoGo Squeeze indicator and the ideas around volatility compression, let's just remember what we're trying to do. And that is to gather all of the information possible provided by these powerful technical indicators, but to remove the analysis paralysis or that indicator overload from our charts. We need a simple chart in order to make simplified and disciplined decisions. So as we talked about in our last video, we have a complete solution from GoNoGo Charts that includes the concept of trend identification, all of those powerful tools to see price action when it's in a trend and what direction and strength it has. We talked about the GoNoGo Oscillator, the idea of blending multiple momentum ideas and concepts as well as volume into a single panel below our price panel. Now, we talked about those icons and the interplay between trend and momentum, specifically around the idea of money management. How do we stick with trends that are pervasive? How do we get out quickly when they come to an end? And using momentum as a forward-looking indicator to help us time those decisions. Now, we noticed the icons around the price panel, and today we're going to talk about the last piece of data visualization, which is the idea of the volatility compression and the GoNoGo Squeeze. Remember, trend following is simple to say and very difficult to execute in practice. So, Alex, with all of that as a background, let's dive into the idea of volatility. What are we talking about here?
Absolutely. So we know that volatility compression happens at important moments. And it's also true that periods of low volatility are often followed by periods of high volatility. The way I was taught it and the way I like to teach it is if you imagine a tube of toothpaste with the top on and you squeeze that tube of toothpaste, eventually the top's going to blow off. And I don't know why, but that sticks in my mind, and that's a good way for me to remember it. So hopefully
Have you
that
seen
helps.
my 9-year-old do that in her bathroom?
hopefully that helps somebody somewhere. But we also know that this can happen either in trend or at points of reversal, right? So we can have reduced volatility as price velocity and price movement sort of stagnates and then trend reverses, or we can have a consolidation of gains before a kick on in a current trend. But how do we find that compression without our number one enemy, as always, subjectivity? And so what we're looking for then is a concept or the idea of looking for a volatility squeeze. Now, if you're a technician, if you've been using technical analysis for some time, you will have come across plenty of indicators that try to capture this idea. And probably the most famous are the Bollinger bands, right behind that, the Keltner bands. And the idea is that as those bands narrow, remember, we talked about Bollinger bands at some length in one of our earlier videos. The bands encompass the vast majority of the data. So when those bands narrow, that means all of that price activity is not moving very far from its mean. So when we get those narrowing bands, we tend to understand, or we will understand, that price action has stagnated. We are seeing reduced volatility. And at some point, there will be a period of higher volatility, be explosion in one direction. So we'll be advised by Bollinger or the textbooks that we've read to trade then in the direction of the break. Of course, that's one of the ways of using Bollinger bands. Now, if we go on from here, we can have a look at an example. What we've got on the chart here is the Bollinger band indicator around a chart of INSW, which is International Seaways. This is from some time ago. And you can see how in the middle of that chart, those bands get really, really narrow as price has moved really sideways for a period of time. And you can even see the candles have become very small and price is moving sideways, not a lot of price movement in either direction. And so as you look at those bands, you can visually identify how narrow they are. But if you look at the panel below, that's another tool that was given to us by Bollinger when he developed these. and it identifies Bollinger Band width. So you can see right there at that same moment, it's making a new low. That's the lowest point for Bollinger Band width that we see on this chart. So as we see price activity compress and we see those bands narrow, we know from looking at Bollinger Band width in the lower panel that we are seeing relatively very low bands compared to what we've seen over the history of this chart. So in this case, we might say now this is the time to trade in the direction of the break. And you can see that price then moves higher as it rides the bands for a time, and we see some higher price movement towards the right side of the chart. Now, if you move this chart on, what we've got now is our version of identifying that squeeze, because we want to put everything that we can, remember, in one chart that is very easy to read, that doesn't take your eyes away from price too much, because we leave the price panel nice and large. Now, we know the importance of the zero line at this point, right? We've talked about it at length. We talked about it in the previous video, how all of the background inputs to our momentum oscillators are in their neutral territories. Our oscillator goes to the zero line. So that's important information in and of itself. But what about situations where the oscillator rides the zero line? That means that there's been very little directional momentum. All of those background inputs have stayed in their neutral territory, and so the oscillator remains at the zero level. Now, when that happens, we use our GoNoGo Squeeze grid, and that grid climbs for every bar that the oscillator stays at zero. So when that grid reaches its max, what we're doing really is visualizing reduced volatility. So this is that same chart, and you can see how that sideways period of price activity in the middle is highlighted by the climbing grid of the squeeze. And then when that break out of the squeeze comes into positive territory, we see price move higher from there.
Brilliant. So let's take a look at another couple of examples. In this case, the ETF proxy for the US dollar index, UUP. And I think one of the biggest questions traders have is, how narrow is narrow enough? What frequency are we going to use to make sure that we're trading in the direction of the break when price is doing this? And if we're just looking from left to right, this middle section, right, we see price making new gains, we see it falling, and the range of price action narrows as Bollinger Bands narrow as well before we see that breakout. Classic example. Now, remember back to the first video when we talked about our trend following process, and we've talked about the importance of volume, we've talked about momentum, we've talked about using multiple indicators on our chart to give ourselves that weight of the evidence approach. Now we're adding Bollinger Band width, we're adding those that extra component of exposing volatility, and suddenly our chart is incomprehensible, right? What's important on this simplified chart of the US dollar, right? We're looking at that peak in the US dollar trading action in October. Where do we see the break of the squeeze? Is this narrow enough, right? Has the Bollinger Band creeped into an area where we want to be trading the break? Are we seeing volatility compression or not? And when we simplify our chart, right? So now we're looking at a current example of UUP, that same area where price action began to narrow, we built up the squeeze. In fact, multiple GoNoGo squeezes before a decisive break to the downside. Now we're seeing this in a trend reversal. The momentum oscillator comes back to test the zero line, and instead of being able to break through to positive territory, it's rejected, giving us that trend continuation icon. The no-go takes hold, and now we're seeing negative momentum, right? Moving into oversold and back up to neutral, as we discussed in our last video. So when we're using a GoNoGo chart, we're capturing all of that information, the same thing that we were looking at in our more complicated checklist chart, but with a simplified visual and a much less subjective way to trade the security. Alex, let's go back to the international seaways example one more time, because volatility squeeze doesn't always happen in a trend reversal.
No, that's right. And what we often see is after a run in price, we'll see some consolidation of gains, right? We'll see some pullback against the trend. And you can see that at the beginning of that squeeze, we do in fact have one of our icons, a go counter trend correction icon right there, saying that prices may struggle to go higher in the short term. We turn our eye to the lower panel. We see oscillator stuck at the 0 line. GoNoGo Squeeze builds to its max, and we watch now for what happens next. Unlike the example using the ETF representing the dollar, it didn't turn down. Oscillator didn't break into negative territory. It resurged in the direction of the Go trend, and now we see higher movements for international seaways. Of course, these charts are slightly dated, but that's the idea with using the GoNoGo Squeeze.
Fantastic. So for any of you who have questions about how to use these tools, or you're using them in your own account and you wanted to reach out to us, you can always send us an email, info@GoNoGoCharts.com. We'll be back with our final 6th episode in this GoNoGo educational series. And until then, take care of each other and trade them well.